The storms, the hurricane, as we just saw, unfortunately, is always going to be an issue where we're located. So a disaster in Guam, per se, could have issues in Florida, underwriting Florida insurance. So if you have a bird cage on your home, on your house, that's the first thing that goes down in a big storm, generally that, and the roof. There's no coverage for citizens with that. There's no off-premises theft. You're at a hotel and your goods are stolen. With other insurance companies, you have coverage for that. Citizens, you don't.
So we need to make the business of litigation less profitable. Welcome back, Novello Nation, to another episode of the Aaron Novello Podcast. We have with us the Homeowners Insurance Specialist. He's been doing this for 25 years. Mr. Jason Smith, he's the president and founder of Personal Risk Advisors in Boca Raton. Really appreciate you taking the time to be with us here today. Pretty timely with the storm that we just had come through Florida.
It's absolutely. And thank you for having me. I look forward to it.
Yeah, my pleasure. My pleasure. So I always like to bring people to the platform that I think can, add a lot of value. And you've been doing this a long time, and I know that you can. And I read recently, and that's what prompted us to reach out to you, that the kind of options that are available for homeowners with insurance in Florida are becoming even less, right? So if you could kind of maybe a landscape, like a 30,000 foot view
Sure.
of, homeowners insurance in Florida, and then perhaps we can drill down on that.
Yeah, good question. So homeowners insurance in Florida, ever since Andrew passed, has always been difficult per se on a scale, relative scale. It's had its ups and downs where the market has been a lot easier to deal with, and there's been a bunch of insurers and they're willing to insure a lot. And then there's been times like we're in now. It's very cyclical where the opposite occurs. The market becomes called hard. Insurance companies, there's a lot fewer insurance companies willing to take on a lot less risk. They limit their guidelines so they can underwrite better, where in a soft market, they call it, in a better market, let's say 5 years ago, it's much easier to place business. You have carriers fighting for your business. Now you have carriers fighting to not get your business.
And I'm wondering, so like what's underneath that? Like, I'm clear there may be like a supply and demand curve. Does that have to do with like storms? Is like, what drives that imbalance of supply and demand? Because it seems pretty drastic, where 5 years ago, people were fighting for your business, and now they're like, nope, like I'm going to do everything I can to like not take it.
Again, it's all, compared to most of the rest of the country where, we have 50 homeowners carriers, they have 200 or they have 500. So in other states, you have the national companies that have been around for 200 years that are A++ rated, like Chubb and Hartford and Travelers, and companies that you grew up being familiar with. After Andrew, because they're stockholder companies, Allstate, State Farm, they all left the state because they have shareholders to answer to, and they couldn't take on the risk anymore in Florida. So they just insured elsewhere. Most of the companies that insure in Florida on homeowners insurance side are local companies. They're regionalized. A lot of them started in Florida or don't insure so much nationally, but they insure regionally.
Yeah. So it sounds as though that prior to Andrew, which for those who aren't aware was a major Category 5 hurricane, I think one of the biggest, if not the biggest, to like hit in the United States historically. And it really wiped out Homestead, Florida, which is in Dade County, Florida. And since then, what you're saying is that the major kind of publicly traded insurers, they saw it as too big of a risk because their out-of-pocket outlay was too big, and they said, "Okay, we're not doing this anymore." And who had to fill that void and fill that gap were local companies. Is that right?
100%.
Okay.
So even in the perfect insurance world in Florida, since I've been here, I came here in 2001. At the best, our pool of insurers are a lot less than in other states. So we're already under the gun compared to other states. even in a perfect insurance environment. When we're we're now in the total opposite of perfect and imperfect. It's as bad as I've ever seen an insurance market anywhere in the country in the last 25 years. What that attributes is there's many things that attributed to. One, we have the storms. The hurricane, as we just saw, unfortunately, is always going to be an issue where we're located. So with that said, is insurance companies have to purchase reinsurance. Insurance companies purchase insurance just like you and I do. So when you have your homeowner's insurance policy with Citizens or Tower Hill or Olympus or Edison, or wherever you have it with, they're paying for insurance. So if they have a claim, a total disaster in a concentrated area, they're not on the hook for it. So let's say they're on the hook for the first 30%, and then they're paying, there's 20, let's say 15, 20 major reinsurance across the world. So when reinsurance companies raise their rates, it's like a trickle-down effect. So a disaster in Guam, per se, could have issues in Florida underwriting, Florida insurance, and vice versa in other parts of the state or the world. So the insurance companies are having to pay more, are having less allocation. So the reinsurance companies, just like insurance companies, say, here, you can insure this, you can write this much premium in this much area. So the allocation in Florida is a lot less than in other states, where reinsurance companies you have what's called more capacity. The insurance companies have the ability to write more policies, and that's where that supply and demand comes in. So the cost of insurance for the insurance companies has been going up drastically. Then you have the storms, which is always in play. And then the last several years you've had, which has been the tip of the iceberg, is fraud. It's been all over the news the last few months. Everybody probably knows a family member, a neighbor, someone that's gotten a free roof, a free kitchen. The claim started with a couple $1,000s and it ended up being $100,000. Chances are they hired a public adjuster and they assigned their rights away to somebody else, like a public adjuster or contractor, who takes that claim and fights the insurance company. Many times it's justified, and the insurance company is maybe not doing all of what they should do or what they should do. So it's justified, but more than not now, people just call public adjusters before they call the insurance company. And the amount of litigation in the state of Florida and legal fees, I think we have 75% of the litigation fees in the country out of every state. So the whole entire country, we have 75% out of the whole entire country. So that just shows you
wild.
It's wild. It's crazy, but it's Florida, so it doesn't really surprise me.
So if I'm understanding correctly, this is great, because now I'm getting clarity around this, is that insurance companies go out and buy insurance. It's like, so if there is a disaster, they're only on the hook for like 30%, and then their insurance covers the rest. And that's what's the cost for the reinsurance is going up, and they pass that on to, homeowners. I'm also aware with a smaller pool of people who are doing that also decreases supply, and increases demand because everybody needs it, right? Particularly if you have a mortgage, like you have to have it. Otherwise you won't get the loan. And that's contributing to kind of the cost of insurance being so high. There's also the risk factor. I mean, we live in a place where there's, hurricanes on a somewhat frequent basis. And then the third, which seems equally as powerful in terms of driving up costs or causing insurers to not want to do business in Florida, is the level of fraud, as far as all the litigation and all of the, kind of drag of expenses that comes with that. Is that right?
Yes, absolutely. So the litigation and the drag could be a couple of years even. So there's no way for an insurance company to budget for fraud. There's ways for them to model and budget for catastrophic losses like hurricanes, earthquakes, things of that nature, whatever risk that they underwrite. But you can't underwrite fraud when there's no caps. So there's no caps. So if every time, if for instance, after this storm, I believe you have 3 years to file a claim after a storm. So if it rains in a year and someone's roof is damaged, a lot of times now, you live in these planned communities. Next thing you know, after a rain, you get a text or a call from a roofer, a contractor saying we can get you a free roof through your insurance. It's rampant. It's for the last few years. It happens to me constantly. So things like that are occurring, and after a storm, I believe you have 3 years. So it just ended a couple months, about 6 months ago from the Tallahassee storm, which is a couple years ago, where you had those tail claims of people putting in claims 2-3 years later, and they were putting it in. It was really what would be normal wear and tear. So insurance doesn't cover wear and tear, just like your car insurance doesn't cover your tires. You have to pay special insurance if you want wear and tear covered, but wear and tear happens and then you get new tires. That's how it's supposed to be with a roof. It's not a maintenance plan, but insurance has become a maintenance plan in Florida for many. And for many years, the rates were so low when it was, quote, the good time, the rates, we all knew in the insurance industry that the rates were too low, that something had to give at some point. So really, I mean, if you're paying $10,000, you might need to be paying 20 or 30 for them to have rate adequacy, let's per se.
Hence the reason why they don't want to participate.
Well, if they can't, right. So what happens is if the state's not giving them their rate increase, they just withdraw. They say, okay, well, we're not going to write, or we're not going to write in a certain area. We're going to pull out of the legislature just passed the rule a couple of months ago. DeSantis called a special session, and they passed the law that insurance companies had to take roofs that were 15 years or older that had a life expectancy of 5 years or more. So the insurance company said, okay, well, we're going to change our underwriting guidelines and acceptability issue, and we're only going to take homes that are 8 years or older or 10 years or older. So if we don't take homes that are 16 years or older, we're never going to have to deal with that.
So like, in other words, what's so interesting is it's like, human nature is that as humans, we're going to look out for our best interest. I mean, we're selfish by nature, right? If you look at a group of kids, like they have to be taught to share. I mean, that's how that works. Right. So I'm imagining, this is my experience, you've been in that game for 25 years. I'm imagining these rules are in place about how fast and how quickly you can raise rates. Because if left unchecked, it explodes, right? Because they're for-profit organizations and they don't really care and they'll raise them as much as possible. There's also my experience in having dealt with insurance companies, like their intentions to try to pay as little as possible and mitigate that. And most people don't have the means or the wherewithal to like fight with them over an extended period of time to like, kind of work it out with them. So they'll just take a small amount and, kind of move on. And on the other side, you have consumers who are like, hey, Jason, I really need a new roof. It's like 18 years old. I only had one tile that got knocked off in the storm. But if I hire this adjuster and he finagles it and he or she gets compensated as a percentage of how much they get from the insurance company, they'll fight with them. I'll get $100,000 roof when I didn't really need it.
You got it.
So it's like both. And what's happening is you're trying to like do business in that environment.
And I get it on both sides because I've seen it both ways. More than not, the insurance companies do the right thing. But there's a reason that public adjusters and and attorneys were born, because someone wasn't doing the right thing or doesn't always do the right thing. And so you're correct, that the little man can't fight, but they shouldn't have to. But sometimes they do. So that's where the state needs to step in, the state legislature, which they've been needing to step in since, other than a few years. It's been really bad for the 20 years that I've lived here, other than maybe a handful of years. It's been awful. So
what do you think will happen moving forward? So like now they passed this rule where they're not going to, like, he's like, hey, you have to take, insure homes that have 15-year-old roofs if they have at least a 5-year life expectancy. And as an agent, if let's say I'm on the listing side and the buyer does their inspection, it's like 5 years left. And we have started to see that the insurance company's like, nope, like we're not going to do that. Right. And they turn around and they make their guidelines only 8 years. And what that does is that puts people where the only insurer is Citizens. Is that right?
It does. It does.
And that's and then for everybody that's out there, just for their clarification, is Citizens a publicly traded company? Like, what's the?
No, they're not. They're a state. They're a state entity. They were designed to be a company of last resort, which has become a company of first resort, unfortunately. When in 2001, when I moved here, there was only maybe a handful of companies. It was at Citizens at that point was called the JUA, which was the Florida Joint Underwriting Association. You had Tower Hill. You had a couple companies that wrote X-Wind business with no hurricane coverage. And that was pretty much it, unless you had a multi-million dollar home and you had Chubb and AIG of the world. But that was it. So, and premiums were really high, but you didn't have that was the world. And that was a lot closer to, after Andrew.
And what's interesting though, is you mentioned that Citizens actually was started as like an insurer of last resort, and what they become, because you said 75% of all homeowners insurance is through Citizens in the state of Florida. Is that right?
That's a guesstimate just from my experience and what I'm looking at and over the last several years. And I'm pretty high volume. I write a lot of policies, so I can see what the transition is. 3 years ago, for 10 years, I didn't write one Citizens policy. I wouldn't do it. Had no need. And then finally, it came to a point where I had, if I had people to serve and help, I had no choice.
And because Citizens is like this last resort, and if you're getting a mortgage, which 93% of the population does, I think only 7% pays cash, where I guess that would be optional. Obviously, you would probably still want to do it to protect, the asset. And if they're the last resort, I would imagine they have incredibly power as far as what they can charge. Now they're they're a state kind of organization. At the same time, they have the same problems that these other companies do to try to operate.
100%, except what they have that the other companies don't is they have the ability to assess every homeowner in Florida that has homeowners insurance, I believe up to 45%. So in the event of a major disaster and they were to go out of quote, lose be bankrupt or all their surplus be gone and not be able to pay claims, they now hit a button and they get the money, where other insurers go out of business. Because
there's rules about
because it's a state insurance company.
How interesting. Company. So they could. So let's say, we had this monster storm in Fort Myers in Florida and Naples area. And let's say they do 75% of all the insurance there. And for whatever reason, there's a shortfall because it's this huge disaster. And the reinsurance covers 30%, but that 30% number is enormous. So they can go to everybody and be like, yo, guess what? We're raising premiums 40%, push a button, everybody has to pay it, and then they get all the money.
Well, Citizens can't do that. That's different because
they can't.
No, so there's assessment and then there's rate increase.
It's like a special assessment where you just
it's a special assessment, and it doesn't just go to Citizens; it goes to every homeowner that has a homeowner's policy.
Wow, so it's like with a condo where, let's say we need to fix
it. Might just be Citizens. I have to verify that, but I'm pretty sure that it's every homeowner that has a homeowner's policy, but it might just be Citizens. But what Citizens does have is Citizens has a rate cap. So the state legislature, they're only allowed to raise the rates annually. It's either 11 or 12%, where other insurance companies don't have that cap. So in Louisiana also has a state entity called Citizens, and they just proposed a 60% rate increase. So we are lucky. Well, the consumers per se in Florida are lucky.
If I'm understanding correctly, so Citizens can't just raise the rates, but what they can do is, if you think about it with a condo association, and let's say they need to redo the balconies. So they go to all the homeowners and they don't have the money in their budget. And they go to all the homeowners and say, hey, we need $20,000 from every single homeowner. We're going to give you two choices. You can either just give us the money up front, or here's the payment plan, or we'll take out a loan and you'll pay us out over time.
I don't know exactly the specifics because I've never seen it happen. Fortunately, we haven't had to have that happen. But yes, they have a mechanism that if they run out of money, that they can go and raise it very quickly, and it's already thought out and planned.
And in Louisiana, they have they don't have that kind of governor in terms of how much they can raise it by.
Correct. Yep. So, and another thing that people don't, and unfortunately it's not expressed enough, Citizens as a company of last resort has limitations that other insurance companies don't have, like the private insurance companies. So, Citizens only offers $100,000 in personal liability, where regular insurance companies offer 300 to 500,000 generally. Citizens doesn't cover screened enclosures. So if you have a bird cage on your home, on your house, that's the first thing that goes down in a big storm, generally that and the roof. There's no coverage for Citizens with that. There's no off-premises theft. So, your golf clubs are stolen out of your car. You're at a hotel and your goods are stolen. With other insurance companies, you have coverage for that. Citizens, you don't. So there's limitations.
And the sheer volume, I would imagine, if they're like 75% of the market. And what I wrote down here, which is interesting, is you're forced to use them essentially, like you're being jammed in, but you're also being underinsured. If I heard you correctly.
Right.
And then somebody might, I would imagine that the challenges for you is like, okay, because in most people's mind, they're just thinking homeowner insurance is homeowner insurance. Like, I just need to be insured so the bank will lend me money so I can buy this house.
Right.
And then you go to them and you're like, listen, yes, at the same time, like from industry standards, you're actually underinsured. And I would propose you get this other policy that would make sure that, you actually get the full coverage that you need.
Correct. And unfortunately, that's the only coverage that can be added or bought back or an additional. You can't, there's no coverage for bird cage, for the screened enclosure. There's not a policy out there that you can go buy that. So, there's a lot of people that have $30,000 to $50,000 screened enclosures that are uninsured. They probably don't even know that. They probably were never even made aware of that. And then the ones that do probably have no choice.
So hypothetically, let's say, in the storm, I'm imagining lots of screened-in enclosures were blown away or destroyed. And here the normal homeowners thinking I got homeowner insurance, that's cool. And if they're with Citizens, they don't. And they're going to have to pay to fix the enclosure or to put it back, right, or whatever.
Or not put it back.
Yeah, or not put it back. Wow, that is so interesting. So then if you were to give a blueprint for folks, for home buyers out there or homeowners, whether they're purchasing a home or they actually own the home, what would your suggestion be? Because they may find themselves in a situation where they just got Citizens. They don't really understand it. I think what you're saying is 100% accurate. I don't think most people do. So what would you suggest to them? Let's say two separate suggestions. One is you're purchasing a home, you're getting ready to become the homeowner. The second is you already are the homeowner. What would be your kind of tips and tricks?
It's super tough in Florida. And right now where it's such an extreme environment, like we've never seen ever. So in a normal environment, it's a little bit different than here because, up until 2 years ago, insurance companies would take a tile roof that's 30 years old. Now, many of them want it 10 years or newer. So, right now, if someone calls me up and says, Jason, what's the best way to get the lowest insurance? I'm going to say to live out west and to have a house that's 10 years or newer with a roof that's 10 years or newer. So basically, who can replace their roof? And that doesn't mean tomorrow that the insurance companies are going to change their guidelines and say, we want roofs that are 5 years and newer. So then what? So you can never win. So there's a point where you have, there's no happy medium right now, which is the problem.
So in other words, what you're seeing based on what you're describing is having done this for so long, the environment for homeowners insurance is unsustainable. Something has to change.
It's unsustainable. Something has to give because, forget about people buying new homes with DTI that, you're going to buy a $300,000 home and now the premium $15,000. I'm seeing that all day long for older houses in Miami, for Lauderdale. The normal person can't afford it. They don't want to afford it. It can't sustain. So just from a pricing issue, it can't sustain.
So there's two ways, right? So I hear you 1,000%. So in other words, just for those who are listening, he said DTI is debt to income ratio. And what's happening is that the cost of homes due to the run up, after COVID and very cheap money has exploded. And also at the same time, simultaneously, we've just gone through an environment where we've raised interest rates faster in terms of 30-year fixed mortgages in the last 8 or 9 months than we have in the last 30 years. We went from 3% to 7%. So somebody whose payment was $1,600 is now $300,000 for the same property. But then you couple that with an insurance premium that's $15,000 for the year. That's not something it's an affordability problem is what you're saying. And that's not sustainable. Now, do you think that the answer would be is that, there'll be probably the marketplace will, because I think the Federal Reserve has made it very, very clear that they're committed to kind of slowing down the real estate market and prices because they recognize that they have an affordability problem. And the majority of Americans have the majority of their net worth tied up into their house. So if you take that asset class away from people, you're creating a huger divide between the people who have and people who don't. And usually good things don't happen when you do that. So they're 100% committed to being like, okay, we need to raise these rates and we're going to keep raising the Fed funds rate. We're going to get mortgage rates around 8%, maybe 8.5%. So we'll take all of these people out of the marketplace who are purchasing homes with very cheap money. And that should cause prices to come down, right? In hopes that that makes things more affordable. Do you think that that same, like, what would be the mechanism for causing premiums to come down? Or is there one, or is there just going to keep going up?
It's litigious. It's a super litigious state. There's no caps. The insurance companies need to know that there's limitations and caps on attorneys and attorneys' fees, and there's some control mechanisms that doesn't allow, that protects the insurance companies. It's sort of like years ago we had this issue with mold. There was a few years that there were some builders who were having issues, and this is even before the Chinese drywall. Mold issues years ago, and the insurance companies said, look, if there was no cap. So now every standard policy in Florida comes with $10,000 in mold coverage. You can increase it and purchase up to $50,000. Before there was no limit. So insurance companies were having the same issues with roofs where you get mold in the house and it wasn't just $10,000, it was $500,000, and fraud was running rampant. So the state stepped in, and now there's limitations, and that's what we need for homeowners insurance. So
what I'm gathering from this is we need to make the business of litigation less profitable.
Yes.
And when you de-incentivize or make the business of litigation less profitable, then those actors or players go away. The insurance companies are very clear on what their exposure is, on what their liabilities are. You'll have more people that flood in terms of insurers. That will give more people options. Usually when there's more options, rates come down and so on and so forth.
Yeah, you got it right there.
Yeah.
Competition breeds rate reduction.
That's awesome, brother. Well, this has been great, man. I have learned a ton. I hope everybody out there has learned a ton as well with regards to like how this works. One thing before I let you go, because I think it's on people's minds right now, for everybody who was affected or like whatever in the state of Florida, with the storm Ian that just came through, what would be like a bullet point checklist for folks to do? Like, should they be documenting the damage? Should they be taking pictures? Should they call an adjuster? Should they call an insurance company first? Like, what should they be doing?
I mean, first of all, I hope everyone's safe. And they should make themselves safe. That's number one. Take care of themselves, make sure they're out of harm's way. Then as a responsibility of an insured is to mitigate the losses. So if you have a hole in your roof and you can put something up there, safely, you can have a company put something up there to block, to mitigate the loss and try to stop the damage if there's more damage occurring. Then it's call your insurance agent, call your insurance consultant or your insurance company. I prefer my insurance clients to call me first so I can help them with the process, and make sure they're hopefully not taken advantage of. Absolutely. Videotape, take pictures. I tell all my clients to take a 3-minute video after I write a policy so they can, and to store it away. It's not necessary. You're still going to, but it's a good thing to do.
Awesome. So you heard it from the guy who knows the most about homeowners insurance. So hopefully this episode has been helpful, useful to you. If you really, liked it, go ahead and smash the subscribe button. Be sure to share it with someone that you think it could help them in some way. And then if folks want to find you, Jason, if they need help, if they have questions, if they need a policy, like if they want to talk about getting that additional insurance we talked about, if they look at their citizens policy and they're like, kind of underinsured, how can they find you? Where should they reach out to you?
You can find me at www.prainsure.com for personal risk advisors, www.prainsure.com.
Awesome, man. Well, listen, you have done a service. I think people will get tremendous value. We appreciate you, and I look forward to reconnecting soon.
Thank you so much for having me. Have a great night.
My pleasure.
Thanks, Aaron.